An analyst has gathered following information. Okay. You are required to calculate, number one, you are required to calculate cost of equity as per DDM, dividend discount method model, and cost of preference capital. So now moving on to calculation of KP and calculation of KE. In KE, there were three models that we discussed. Number one was CAPM, number two was dividend discount, and number three was bond yield plus risk premium. Okay. So the first method that we are using is dividend discount model, as well as we are going to calculate cost of preference capital. As I told you, each and every part of the reading will be touched in detail. Basically, once you go through all these four questions, these are designed strategically. So once you go through all these questions, you basically recall each and every part of your topic. This is the way we have designed, I have designed these questions. Okay. So let's read the content. Current market price per share of common stock, 60. Current market price is 60. Most recent dividend paid per share. Dividend paid per share. You should be very, very careful when you are dealing with this one. They will confuse you with a D0 or a D1. Is it a expected dividend or is it a paid dividend? If it is a paid dividend, that means it is D0. If it is a expected dividend, that means it will be D1. We as a formula, we are supposed to use D1. And if D0 is given, then we will multiply 1 plus G. That means the growth rate to calculate the formula, to calculate the outcome. Okay. So expected dividend payout ratio is 0.45 and expected return on equity is 20%. Hang on. I think I should write the formula for now and do the calculation parallelly as I read the question. The formula for KE is D1 by P0 plus G or D0 into 1 plus G by P0 plus G. This is the formula. And for KP, the formula is D by A by I was the perpetuity formula. D by P is the price of the preference share. Okay. Basically dividend by market price of the preference share. Okay. Now let me plug in inputs. How do we calculate G? By the way, I gave you a formula for calculation of G, which is B into R. That where B stands for retention rate and R stands for ROE. Then I also told you retention rate is equal to 1 minus dividend payout ratio, and R is the ROE of the company, return on equity. So they don't give me this retention rate directly. What they have given me is expected dividend payout ratio, which is 0.45. I can use that to calculate my this one, retention rate. 1 minus 0.45, which is 0.55. Then 0.55 becomes my retention rate. Now 0.55 into R stands for ROE of the company, that is return on equity. So expected return on equity is 20. Now you can calculate G, which is 0.55 into 20. It is 11%. So your growth rate is 11%. Now you get your growth rate. You already have your dividend amount, which is 4. You need price of the share today only as an input. They gave you beta of common stock. It's irrelevant. Beta is used in CAPM. Okay. Expected rate of return on market portfolio, risk-free rate. These three things, I don't think they hold any importance in case you are asked to calculate anything as per dividend discount model. Okay. Preference dividend, face value of shares and market value of preference shares. One sec. Face value of preference shares and market value of preference share. Price of common stock is already given as 60. So now you have each and everything to calculate KE. Let's calculate that. KE is equals to 4 into 1.11 divided by 60 plus 0.11. Okay. %18.4%. Okay, KE is 18.4% and there are two options, B and C. So A is ruled out. Answer will be either a B or a C. However, we need to calculate preference to calculate select the correct option, which is D by P into 100 or preference dividend. One sec. Preference dividend is 8.5. And again, there are two options, face value and market value. Which one should we go with? Always market value here. Remember the formula. Remember the formula. For purposes of coupon rate calculation only, for the purposes of dividend calculation only, we use face value. Else face value is just a number. Okay. So in preference also I discussed, I think there was a note to that effect as well. Don't take face value, we will always take market value, because we are trying to calculate return, and returns are always calculated on market value. Remember that. Okay. So 8.5 divided by 105 into 100. 8.5 divide 105, which is 8.095 or 8.1%. C is the correct option.